Hello everyone, welcome to Just Invest Today, and today we're talking about Charlie Munger and lessons we can learn from his Alibaba purchase, man. This is crazy to think about because Charlie Munger is like the person to always look at when you're looking for investment advice. And this is true for the Alibaba purchase. As you see, he displayed a lot of good things. And the first thing I'm going to talk about is patience, man. Charlie Munger has been crazy patient with just making his purchases of investments. So before even Alibaba, he had a story about Barron's where he waited like 50 years just reading Barron's every day looking for stock tips, and he bought one stock and that stock went up 15x in like 3 to 4 years. He talked about Wells Fargo when he bought Wells Fargo, Bank of America, US Bank Corp, and Pasco. He made like 4 investments during that 2008 crash. Think about it. He doesn't make a lot of investments because he's willing to wait all that time to make investments. And honestly, I gotta learn to be more patient because I've made so many investments this year. I don't know if it's just like a me thing, but I've made probably more than at least 10, 11. I did more, like a lot of activity this year. So I really have to put this more in my repertoire of being more patient, waiting for that buy price. But right now, I'm willing to wait the long term with my investments that I do own. So sticking through with my investments from now on after I purchase them. But even though I still do have some on the side that I like to trade from here and there. So I have a 2-tier strategy. But just looking at what he did with Alibaba, man, after his purchases in like 2008, 2009, and waiting all that time to purchase those stocks, he finally made an investment in Alibaba, which is crazy because he got it at an amazing price at $220. And you know Charlie Munger has been waiting to purchase Alibaba. Like, just think about it. He talks so good about the Chinese economy, about Li Lu. He just knows so much about the Chinese economy. It's kind of like surprising that he didn't make an earlier investment, but he did invest in BYD. And you got to think about BYD too. That took a long time to get where it's at today. That took at least like 5 to 10 years when you like think about it to get at this huge price with BYD. So you just understand the patience that you needed to make this Alibaba investment, his previous investments, and just everything. So that's the first lesson we can learn from Charlie Munger, is just extreme patience. He's willing to wait. Second thing, ignoring the noise. We just saw in this Q3 that he made another big 10%, at least 10% purchase of Alibaba, bringing the value to 44 million. Just think about that. He ignored all that noise, man. Think about all the noise Alibaba has garnered like throughout the past year. We had the Jack Ma noise. Jack Ma is missing. He's nowhere to be found. Like, think about that when you're dealing with Alibaba. Think about the fine. Think about just China communists. They're doing everything against their companies. The VIE risk. You don't think Charlie Munger reads 3 newspapers a day. He understands what's in the media, what's going on. He knows all of it. He's just able to like just focus on what he's doing, ignore the noise. So imagine all those things and all those people telling you Alibaba is the wrong purchase, and you're able to do the opposite, have a contrarian bet, make your own decision. And that's exactly what Charlie has done. With all of that noise, he still makes a big purchase of Alibaba. I'm wondering if he actually got that downtick of got like around $140 because it had a nice bounce back. It's like $163 now. So that's a nice little run up. I don't doubt he got the bottom of the downtick like he did with Wells Fargo, but who knows if he did? He got super lucky. So that's pretty funny. But anyways, man, that's the second one, man. Like, just ignoring the noise and being able to like do your own work and make your own investment decisions. That is number 2. So let's get to number 3. And this is super important, man. this is just gonna kind of put it back in your mind to what to really focus on, because we sometimes get ahead of ourselves. We look at the market way too much, the short term, and I have this problem too. A lot of people have this problem, but when you think out 5 to 10 years, and that's the only way Charlie Munger thinks. He's like, what is he, 95, 97, like whatever age he is at, he's still thinking about the long term, which is crazy. Can you imagine you at 97 literally being like, yo, let me think 5, 10 years from now? That's how he's thinking with Alibaba. He's stuck in his ways. There's no way you're changing Charlie Munger off that tilt. Like, he's stuck in his ways. He's always thinking about the long term. So this is a good thing to watch for. Look at this. Boom. Look at this chart. We're gonna get into this chart quickly, but let's read what is under the bottom right now. This Boston study found that over a time period of 10 years, 71% of high performing stocks returns came from revenue growth as opposed to just 1% from the multiple expansion. And this is so big because over a 10-year period, the things that are changing the markets, changing the sentiment, that's driving the short term right now. But when you think 10 years from now, the company is going to perform as the revenue grows. And we understand that Alibaba's revenue has been growing 25% a year. So remember, long term, that's what we're focusing on, because that's where the fundamentals are going to provide us with huge returns. Another study by Morningstar Research similarly found that for an investment horizon of 15 years and longer, the impact of valuations on returns is minimal. Dollar cost averaging would intuitively limit the impact of a short-term valuation changes even more. Thus, while investors' return will certainly be higher if the bottom of the dip, for those of us who plan to hold for years, the exact entry point valuation is much less relevant. What matters the most are the fundamentals of the business and the ability to grow revenue. Man, that's a mouthful. Just understand that, man. The entry point isn't even that important as long as the business is growing. The impact of the sentiment of the market is going to grow 12, 30%, whatever, maybe in a year. But guaranteed, in 10 years, the company is going to follow the earnings of the business, and the revenue growth is what is going to hit the margins of the business the most. Look at this. 1 year, the multiple expansion matters the most. 40%. 40% multiple expansion matters. Can you believe that? And then only 32% revenue growth. This is crazy. And look at the main thing I want to show you guys is this. That 40%, look what happened. It goes to 1% in 10 years. 1%. And the majority is revenue growth. That's the majority right there. And then free cash flow, and then we got margin. So just understand, like, the multiple expansion, and the multiple expansion usually depends on the market sentiment. How happy are people about the company? And that's what's going to drive usually the expansion. When people get excited, they just want to pour money into the company. And that's what you're seeing with a lot of these high PE stocks like Tesla. Like, Tesla was all about multiple expansion. So we understand how that short-term boost was all multiple expansion. But there you go, man. Like, this is it. This chart tells you what's going to be going on, what Charlie Munger sees with a business growing that fast. He didn't even have to pay that much. A very undervalued business with a huge margin in safety. And the thing about it is, uncertainty is what brings these businesses on sale. If everything was certain about Alibaba, it wouldn't be at this price. It would be at like 350, 400. So the uncertainty of Alibaba and where it's going to be brings us an opportunity. So you have to be happy that everyone has these questions about, oh, Alibaba's a dead stock, it's not going to grow, blah, 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 VIE risk. You got to be happy about that because it provides us with a great entry point to buy Alibaba. So that's it for the video, guys. Like, subscribe to my channel, and I'll get back to you in the next video. Peace!